Hello friends, this is a revised update of the PowerPoint presentation of the campaign number 1, Master a Simple Strategy Using Market Internals. So this is a document that's going to keep on changing and being modified. I don't put too much effort into transferring whatever thought I have, all the thoughts and details into this PowerPoint presentation. I let the subconscious kind of marinate a little bit, and then whatever details that it comes up with, I'll go back into the PowerPoint presentation and update it as we take trades day after day. So what I think back in May 12th or 10th, I started from scratch with everybody, first defining what a campaign is. And I think psychologically it's important to kind of just, make a commitment, kind of like a New Year's resolution. And one way to start that off with is just with the definition of what a campaign is. And I've gone through this many times, but it's kind of like if you can watch the markets and the candlesticks move up and down repeatedly over and over again, you can definitely deal with the repetition of me grinding this concept into your mindset so that you can understand it. But here, the definition that I just simply pulled from the website of what a campaign is a connected series of operations designed to bring about a particular result. Okay, so we start off with the definition, and then we kind of first drive into the purpose of this campaign using those instruments of weapons of mass destructions, options. Once you click that button, it's pretty much over. So we want to there's several types of strategies being employed in the markets by hundreds of thousands of traders. Here we use about 3 or 4 alongside with several setups. But for this specific strategy, which is non-correlated to all the other strategies we use, is basically taking advantage of the morning volatility, especially when there's a big change in price, right, up or down. So with the definition of the campaign, where we have a connected series of operations, we want to just kind of understand, before we go into the operations, we want to first kind of understand the purpose of this campaign. And that's basically trying to take advantage of the morning volatility. So campaign goal number 1 is to master a simple strategy that's used by hundreds of thousands of people, but there are things that we have to keep in mind. Each trader will have their own little flavor, but maybe they don't express it. We're specifically using market internals, so the UVOL, Trend, VIX, and then make an assessment of the price relative to the market index. So we'll look at all those together. And then when you create a goal, you have to understand that you should try not to deviate from a goal unless you've created a separate campaign running alongside this campaign, right? Because one of the reasons is if you your eyes start to wander off, then there are some repercussions that can result from vicarious trading. And the markets are very psychological. There's definitely a lot of things going on, moving parts, where maybe one trader is claiming that they made $100,000 in one day, which could be true, right? You just don't know what their position size was at the beginning. There's a lot of managing risk, right? And then sticking to that strategy is part of a disciplinary action that you're going to have to take. And it's going to try to strengthen it day after day after day. And then as a result, you'll get some sort of reward out of it, right? The next part here is we want to talk about the starting balance. So it should be asymmetric in nature, especially when you're first starting your first campaign. Obviously, when you make this relationship with other things in life, for example, sports or academics, you start off on level 1, right? And then you work your way up to some sort of max level. Now, what I'm suggesting or proposing here is maybe level 1 for those could be at 1,500, even though you have the ability to start the balance at 15,000 to 150,000. Any campaign that you kind of begin, especially when you don't even create it and it's just being kind of spoon-fed to you, you do want to make sure you're not taking full risk, right? You want it to be asymmetric, and then look at the data points, meaning the trades, and then see if it makes sense, if it's going to be working moving forward or not. So the market will always be there, right? And it's just a matter of whether or not you're understanding what the markets are displaying to you through the market internals, and then collecting the data points for every trade you take, and then evaluating it at the end of that campaign to see if, whether the starting balance will change in campaign number 2 or 3. And then always, there's going to be some sort of particular result that is going to be looked at the end of the campaign. And what I've done here is I've basically kind of used a simple online calculator that uses a compound interest of 35%, and 35% is the average win rate. So using $300 and generating 35%, we generate $125 profit on your first trade, and then compounding that to your second trade, you'll get 178, 252, 358, and 509. Now, the reason why we're not keeping this a simple interest, because there will be times where the price moves so fast that maybe you're not going to get 35%. Maybe you get 40 to 50 to 100%, depending on how many contracts are being managed on the initial move, right? Because it can move pretty fast. Like as soon as it moves and you get in, it could already jump 75% in literally seconds. And then you close off and then you hold a runner, right? So 35% is a pretty conservative percentage to add to I guess replicate or try to model the margin of error for every trade we take, right? It can be plus or minus 35%. When you have unrealized profits, the daily profits before you close anything can be swinging around plus or minus 35%, right? And then when you close it, depending on how you close it, then you could have 2 times that, maybe 75%, even 200%. So that margin of error is being modeled using a compound interest percentage of 35% applied to it daily. Okay, so then if you add that all up, your profit, cumulative profit, should be $1,424. Add that $300. So here I'm assuming initial position of 1,500, and then the position allocation amount is going to be 20%. So add that $300 to the cumulative profits, you get $1,724.91. So that's kind of like the fifth trade. That's how much you should be expecting. And then if you reach this goal or around it and you feel comfortable, then you would now adjust the allocation amount for the next round. The advantages of the gap reversal campaign is, first, the time commitment is like concise. So it could be max 1.5 hours, but a lot of the time goes into just identifying, what ticker we want to trade at the open, and that's going to happen 30 minutes before the market opens. Now, and I'll go into detail later, and I'll keep on adding detail to make it clearer about each and every single thought process that goes on. But the main advantage here is time, right? The market's open 6.5 hours. You don't want to be sitting there for the full 6.5 hours. I think you want to just get it done with for the first hour or two, and then come back in the last hour to see if there's any like power hour rally that you want to entertain. But this, the last hour is not really part of the campaign. We'll discuss about other strategies that will be also of interest to those who are active, right? I think 2-3 strategies in one day is a lot. I think one is a lot. Another advantage is that most of the entry and profits are defined deterministically. So, you've been in those times where it's like the price is moving higher, and you see that there's a target that you kind of modeled using some sort of Fibonacci extension or moving average, right? And sometimes it doesn't get there because maybe there's like a price action from the previous day that created a resistance level that you didn't expect, right, on a different time frame. So that's not really going to happen in the morning because the volatility is going to be whipsawing back and forth, and whichever way it's going to go, it's going to create an opportunity for a trader to capture a 35% profit, almost more than 70-80% of the time. Okay, so for example, let's say you get into a position and it gaps. So you're taking the opposite side of the trade, and it was trading at like say $10, and it gaps so much that those contracts are now worth $1. Okay, so that's what we're kind of anticipating, right? Before the market opens, the premiums haven't adjusted yet, and then as soon as it adjusts, and we evaluated the DK amount to be $1, then we can put in an immediate sell limit order of $1.35, which is equivalent to 35%, right? Another advantage is this strategy is very neutral. Okay, it doesn't really rely on anyone being bullish or bearish. It works in both markets. Okay. And it doesn't. Another advantage is that you don't have to carry over. It's not primarily or 80% of a swing trading type of strategy. It's actually 80% holding cash strategy, and then 20% maybe swinging. So 80-20. Okay, so we're 80% cash and 20% swinging. Another advantage is that once you kind of go through the routine with me, it creates an organizational blueprint, so that every morning when you wake up, you don't have to really listen to me anymore. You'll be able to kind of go through that thought process that I've kind of embedded into your mind. And then maybe if there's a unusual type of trade that you would maybe, you could share it with us or keep it to yourself, and then look into it a little bit deeper within those 30 minutes before the opening bell. Okay. And finally, yeah, of course, when you're owning the strategy and mastering the strategy, you're going to be preventing yourself from any vicarious trading. And I'm a huge advocate of I'm an anti-vicarious trader. Okay, I tell people, just like you have a unique number for, say, a social insurance number, you have your own name, you have your own personality. I think everything that any trader everything they learn, they should learn it, own it, and master it themselves rather than piggybacking off of other people, because it's just not possible most of the time. There's position sizing, there's net balance, there's so many things, timing, that could go wrong and not be consistent. So the only way you can be consistent is that when you do it yourself, when you know what the numbers are, what you're expecting day in, day out. And when you do that, you've pretty much mastered it, okay? Yeah, so, is there any disadvantages of this campaign? Well, I guess one of the disadvantages so far, we're like 7 for 7, so it's never lost. That could be a disadvantage. Another disadvantage is that it only trades once a day, and some people could look at that as an advantage because maybe they're busy, and some people might think that's really not enough, right? Another disadvantage is that the profit factor is quite low. It's like 35%. But that 35% acceptance actually increases the probability of success by almost 2 times. So there's a bit of a trade-off. And I'm going to talk about other opportunities where you can increase the profit factor greater than 35% in the next 2 slides. So the campaign general details, basically when you run a campaign, you're not going to go to war for like 5-10 years. You kind of have an exit, right, time period. And for this campaign, we're going to use collect basically 4.5 weeks of data, which means that's trading 4.5 weeks long, and then evaluate the performance. And what our performance should tell us is that on the first 10 trades or so, we'll get an average profit per trade, and it should be around $188, and that will increase week per week. We should understand that the campaign involves using an initial position size that's 20% of the balance, so that's $300 of 1,500. Max position size will also be capped at 20% as the balance keeps on growing. And then the minimum position size will be, the absolute minimum position size will be $300, and that's a nibbler and a starter, regardless of the account balance. So if it's $1 million to 100,000, it's always going to be 300. And if it's a balance of 300, then you're at the absolute minimum, so that's 300. The minimum position size as the account grows is going to be 10%. So your range, your min and max is around 10 to 20%, and then your absolute is 300. Every week, the allocation amount will be adjusted. Okay, so that's kind of like short-term milestones or goals that are set in the week. So if you had a very good week, you'll be obviously plus for that strategy. And then you can decide, okay, the new allocation amount is going to increase from 300 to 375. Okay. So the campaign details, this is the market internals, this is the bread and butter. Okay. And we use this in conjunction with the NASDAQ futures and the VIX. And this is what's going to be discussed in every single trade. So that's going to help strengthen the market internal understanding and also with our trades. Can't go into detail now because it'll take a long time. Campaign strategy and description. So yeah, so again, just to recap here, before going to the routine, the strategy is basically, looking at gaps. Things gap up, things gap down, and they can do that in the pre-market or they can do that in the regular gaps. Our edge, which is what differentiates us from other Discord channels, is the market internals. Okay, so when you go into other Discord rooms, I don't really know if they're, I know that maybe half of them are just probably copycatting trades from other Discord rooms, but if you go into a legit room, they may use simply the VIX. They may use simply the, I don't know, the market momentum. They'll have their own little flavor, right? But from my understanding, it's got to be the Yuval trend that kind of dictates your bias. So that's our edge. And this is what I was actually talking about before. Monday to Wednesday, we'll be locking in profits with sell limit orders at 35% profit. And we'll be kind of like strict and disciplined about that, because we want to kind of, if we continue to lock in gains, especially on Monday and Wednesdays when the premiums are super jacked up, because all the premiums start to decay from Monday into Friday, we want to look to take immediate returns so that we can build that balance up with some juicy profits. And then on Thursday and Friday, we'll still be using the same strategy, but this time we're going to be taking some additional risk where we'll leave some runners, and then we'll still take profits, but with some of the profits that we've developed from the previous trades, maybe after week 2 or 3, we'll look to take some trades that are asymmetric, like by 3 to 4 standard deviations, by assuming max risk. Okay, so that's where your expectation, so we're expecting max profits by creating an expectation for ourselves on those runners to be either 0 or max profit. And max profit is obviously hard to define most of the time. And we're going to housekeep with the ledger. Number of trades per day is 1. And then, fail-safe procedure. If the trade goes against us and it doesn't work on a day, then you got to have a fail-safe procedure that says, okay, we lost on that day, we're coming back on the next day, right? The routine is basically, like I mentioned before in the other videos, it's just basically watching the pre-market line set at 4 a.m. and you can kind of get an idea which is gapping and what are giving some clues of a reversal. And then at 6 a.m. or 9 a.m. Eastern time, 30 minutes before the market opens, I'll give a brief update on the market conditions. So talking about the VIX, futures, and then kind of look at specific stocks that are gapping and see if there's any news associated with it or an A6. So we're gonna, if it has news, then most likely that gap is not going to get filled. If there's no news, then the gap is going to get filled. And then from 9:20 a.m., we'll talk about the VIX, talk about the strike prices, and the strike price selection. If there's 3 tickers available, then I'll post 3. If there's just one that looks like it's got the best shot, I'll go with that one, because every time that is wasted looking through and picking a ticker, the move is already, it takes just literally a couple seconds for those contracts to move really fast. And between 9:30 a.m. to 10:15 a.m., we'll most likely put on that trade, maybe 15 minutes into the open, and then set the sell limit order at 35% and then see if it gets filled. So I've created a whole bunch of slides here. You can go through this. These are actually real trades, okay, using real risk. And these trades were assuming 1,500 balance, but the balance increased quite a lot because one of the trades on a Tesla gap down generated, and a gap up generated like 3x, 4x returns on 1 to 2 contracts. So it's been doing well. You can go through this also in the Discord room. I created just a very simple ledger. Obviously this should be put into a spreadsheet, but as of May 20th from May 12th, using just about an average of $400. So the entry was here is like 199, so that's probably, I put in 2 contracts, that's 400. This is with 2 contracts, so it's 560. This is probably with 1 contract. Yeah, so around, I would say like $400. We've generated, well, I've generated over $1,022. And the time that it took for these to take was about an average of 1.5 hours. Like some of them were just 30 minutes, some of them were an hour. And yeah, this is what I was talking about with like Tesla. We like today, May 20th, we had the 655 puts that we got around like 1.5 to $2, and they moved up to like $30. Okay, and that's huge. Like just one contract, if you open up 3 at like 450, then closed off 2 at like $3, and then held 1 to like 30, that's like $3,000. So after when we do evaluate each week, we'll come to this table here, and then you just kind of look at where you are with respect to the profits that you generated for that week. And yeah, for the week of May, between May 12th and now, there were only 5 trades open, and we generated $1,022, which is below $400 below our expectations. Now that's just the 5. Actually, there was 6 more trades, 3 or 4 more trades that were taken before this. So actually, I'm actually over expectation, but since we're using May 12th as the reference date, then yeah, we're under. Okay, so I mean, the strategy is not too difficult. It's very simple. And I mean, if you're gonna start trading in this market and you're looking for something to master, I would highly recommend trying to master this strategy, which is the gap reversal strategy. And it's being used by hundreds of thousands of people, like in every room, but they just don't have that edge, which is the market internals. This campaign that I'm talking about involves like discipline, so you have to kind of like ignore other traders and how much money they're making, because it's really all about what you want to do with your time, right? And what kind of goals you want to set for yourself. And once you master that strategy, the strategy is going to be yours to keep for the rest of your life, right? No one's going to take that from you. And then you can decide, through all this material, how you're going to proceed each week, week after week, month after month, and see this progression. And I think because of the fact that we're taking and accepting a 35% return on our investment, there's probably an inverse relationship to the probability of success going higher. Okay, and that's a good thing, because once you kind of follow this table here, with just 35%, you should be able to generate a little over $1,000 per week. And then if you do that 3 weeks, you'll have plenty of cash. You can, with that profit, you would probably want to use some of those profits and get ready for a trade on Thursday and Friday. And why Thursday and Friday? Because the premiums are all kind of exhausted and decayed to pretty much 90%. And if you catch a good move, then you can, with just 1 or 2 contracts, you can make a huge difference, impact to your total balance. Okay, and I think that combination of locking in profits with a stricter approach between Monday and Wednesday, and then keeping that strict approach plus adding a little bit extra for that runner to generate max. I think that's 2 good combinations, that kind of schedule that will help traders kind of build confidence and also go through, a period of losses if the runners don't work out. We all go through those losses. But I think that's a good plan set forth for those who are going to, endeavor into the world of options. Okay, so thank you very much for your time and have a great day.